people in Gurgaon doing? Are they buying or are they booking profits in this rise?
Well, if there's any profit left, I think it's not about profit booking anymore. I think by and large profits are wiped out. I think it's all about managing your portfolio at this point of time and not panicking out of stocks that you really don't want to panic out. I think that situation. Mood is somber, definitely, as you know, everywhere the mood is very somber, and it's not because of the oil prices, not because of the, to be honest, because of what's happening in interest rate. It's also because of lots of stuff which should not have been said is being said. And I like what the SBI chairman said yesterday. Listen, it's a market opportunity. We like to go and shop 45,000 crore. That's what we like to hear in a free enterprise, not pontificatory statement leading to market collapse. I think we don't need that. We need more of constructive talk about the industry, the market. We are a large economy. We are not collapsed next morning and so on and so forth. So doomsday scenario should be kept away in communication. I think more supportive mechanisms fall in place and we'll do all right.
So, Ajay, it may sound like a slightly bearish question with the bearish tinge, but I've been trying to juggle last couple of days to find an answer here. And my thought, and then this is just my personal thought, that we've corrected largely because of oil and because of rupee. That is something which markets will adjust. But my challenge is that emerging markets have corrected and US markets have not corrected. What happens if US markets they start correcting? I mean, the impact of that is yet to be felt.
Well, to be honest, what we are seeing so far, US market, even if it corrects, I think they have a policy framework to support the economy, support the market. I think the construct is very positive there. It's not about the mindset is right from the top leadership is to ensure that the capital markets remain where it is. And obviously they're winning the war against China. They're on the trade side. They're doing a lot of correct things. They're bringing the jobs back to America. They're opening factories in America. So, and these have just happened in the last 12 months. So to make a case of a large scale fall in American market looks to be different. Anything can happen, but looks to be difficult. That's having said that, the question to ask is, will the growth in America percolate down to the rest of the world? I think that's where the question is coming out, that a lot of the growth actually is now moving away. China is a very clear example. Growth has moved out from China back to America. So I think the question to ask is that what we're doing? That's one. Number two is, each country has to account for the way we run our businesses, the way we respect our stock market. By and large, emerging markets treat stock markets, including India, is like a mini casino. They are operators. We don't understand stock prices. I saw a chairman of a large company saying very proudly, I don't look at my stock price. Hello, you should look at it, man. We put money in it, so you should look at it. That's not correct. So the mindset, if you look at the US, is so different than what we look at emerging markets. We are emerging markets, I call it, are the socialist economies of the world masquerading as capital economy. They all treat stock market with disdain, not with respect, and that's very evident even in India at this point of time. So therefore, one to translate the fact that US may go down. Yes, sure, it can go down. Sure, things can happen. Interest rates are going up in the US. But I think they are willing to bet on it that they will come back and revive it. They respect the market. They respect the economy. And they're doing the right things to get the economy going. We need to get out of a socialist mindset of loan waivers and this and MSPs and all the other stuff which goes around. If it doesn't give productive investment to the economy, look at what's happened to a capital growth formation. Look what's happened in America. A large economy is growing faster on capital goods than we are growing. So that compares. So I think scare is less. More important is which of the emerging economies will put their house in order and take benefit of the US-China war.
And you don't think India stands to gain there, given what's happening on the currency front? Largely people are betting that, with the currency fall, suddenly the exporters in India will get their share under the sunlight. But do you think that's a far-fetched and perhaps a misplaced assumption?
See, it's not misplaced, but I would tend to believe that lot of damage which happened to the MSMEs in the last 24 months puts a kind of a limit to what we can exploit in the short term. Sure, we can do a lot more steps and take charge of the situation and do long term. But in the short term, Can we suddenly become the major exporting economy? No, we cannot. Our GST mechanism has a crippling effect on working capital. No, we cannot. We need to legislate out some of the stuff very quickly if we have to capitalize on it. So the leather industry, what's happened to the leather industry by and large. So if you look at the components of where we can be strong at, whether it's cotton, textile, handloom, handicraft, garments, leather and all, which are basic industries of India, those are struggling today. And can they just take a benefit of rupee dollar? No. And the reason I say so is we are already getting a lot of our customers whom we work with, that US customers are now saying, you got a big bonanza on exchange rate, how about passing some back to us? So, we have depreciated, so other emerging economies depreciated. So the exchange difference benefit which we get is not very significant vis-a-vis our competition. They all have depreciated. We may have depreciated more, so we have some little component. But a lot more needs to be done to take benefit of export. It's not going to happen because exchange rate is up and we'll be starting to export more. No, our infrastructure doesn't allow us to export significantly more in basic industries.
It is the case. The NBFC issue, Ajay, and the kind of lifeline that's been extended out from SBI, RBI, to resolve the liquidity crunch that may be. Do you think that's enough and perhaps a step in the right direction? How would you have seen a resolution in this matter?
I think it's a great step by SBI, and I think they went public with it. It's a great reassuring step. That's what I said. I like that constructive dialogue. There are good assets available at a good price in a fire sale market. Go grab it. That's what makes the commercial institutions and make your money work. So I would proudly say SBI, for the first time I've seen in years, has come out with something which is so business-like and so correct for the economy. Having said that, it's not about liquidity. One thing which is very clearly said, the policy stance was that there's too much of short-term money being deployed by NBFCs. That's not so true. You see the disclosures of DHFL, you see that I saw the disclosure of Edelweiss Capital. 30% in short, so 40% in medium terms, 40% in long term. That's not so true. So I think some of the myths which are hitting the market, the word that too much of short-term money is deployed, yes, some money is deployed, which is always part of the treasury, but not like everything was short-term, so that's not true. I would think that way we have priced our NBFCs now, the only thing which is there, why we will not buy it today, we should buy it, and they're about 2x book value now, which is insanely cheap, is the regulatory action which might follow the new regulation. Guidelines could be, I don't know, could be ad hoc, could hurt the industry very badly. And the reason I say so, we carry a baggage. If you remember it, you may not remember, you're so young actually. 10 to 15 years back, NBFC is a vibrant business. The regulatory scenario changed dramatically. NBFCs died completely. For the next 10 years, we never heard of NBFCs. Last 5 years, again, or 7 years, we again saw the revival of NBFCs. And again, arbitrary regulatory action may put to death or put them in a kind of a slumber mode for some time to come. So I would say, valuation-wise, perfect. There's no problem in it. A business model-wise, no problem in it. Regulatory-wise is a question mark, what new regulations come. So wait a while, you can nibble, you can buy, you can average, but I would still believe that there is a need to have NBFCs in the country. We need to support it. Let's not go back to 15 years back when we killed this NBFC sector and it took us 10 years more to bring it back. And that's what got the economy going. If you look at the last 12 months, it's consumer credit which is getting the economy going. It's a credit card, it's an automobile, it's a personal loans. That's what kept this economy ticking, not industrial growth or industrial expenditure. So let's not kill the golden goose, what has delivered beautiful growth to this country. I think I am expecting a much more supportive framework of regulation, not some knee-jerk reaction just in response to an IL&FS crisis. IL&FS is a different animal. Let's not equate IL&FS with the rest of NBFCs. It is so different, and I would tend to believe that putting IL&FS and NBFC dialogue together is going to obfuscate the truth. The truth is we have very good quality NBFCs, maybe overvalued, maybe whatever it is, and then you have IL&FS. Both are not in the riding in the same boat.